And gold. What can you say about gold? It's one of the most frustrating things to trade. It's either doing absolutely nothing, or it is ripping one direction or the other, or it's faking you out before it rips in the opposite direction. So doing all the sort of stop hunts and that just before it really sort of moves forward. But saw a big move sort of early week after this, like this whole period here was like a 2 weeks of really pretty tight consolidation. I mean, we're looking between 48 and 70, and just every time you thought it's going, no, smack back down. Oh no, it's going down below. No, it's finding buyers again. So, really, just sort of frustrating. But I mean, look, honestly, that move up isn't just a little flare up. These bits here, they're your flare ups. And then it quickly smack back down. Yes, this did come back down. And if you look at it on the daily, it looks pretty sad for anybody that was long. But you've got to look at these things again as a sort of structural thing. And it's nice to sort of think, okay, yes, it's going to break out and it's just going to go, 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 go. But I mean, nothing works like that most of the time. I mean, we've seen the yen pairs this week; they've done that. But least of all, gold. Gold is not one that moves like that. So really, the sort of move back is frustrating for the bulls, for the buyers, but really at the moment it's just looking like a bit of a back test. It never really did it. It just sort of went up here, it exploded. I mean, that candle there, so we're on the daily here, but you're going from 60, and then you've moved up to test 1800, which is, it's 1800. It's that big round number, and that everyone's like, oh, geez, look at it go. Nah, no, not quite yet. Maybe that's an overreaction of the move. Don't really know, but I mean, structurally, you've got this area up here, which the top of the sort of consolidation, this zone here, has been a resistance point for, 2 weeks straight. Technically, you'd expect it to sort of see a bit of a retest. I mean, it's been resistance, now it's testing to be support, and, if it can hold here, then great. Go back, retest that 1800, and hopefully, on its way for the bulls. But yeah, I know there's a lot of people that sort of like freaking out. They're like, oh no, the whole move was a fake out. But these bits here, they're the fake outs. They're the sort of up, oh yes, it's going, and then, the next 4 hour candle, boom, completely 100% redone. But I mean, if you drag, depending where you want to take the fibs from, but if you take the fibs down here, you're sort of moving up. Well, actually, so we went up and down, didn't we? So take the fib from this move here. I mean, you're coming back down here. You're retesting this sort of previous resistance zone, which obviously has been respected a number of times. You're seeing the wicks come in here. I mean, you saw a big bounce off this point here. 63 up to 76. $13 bounce on that. You're seeing more wicks. The actual bodies are getting a little bit smaller, so it's obviously tightening up. And again, it's just sort of like that little, the same sort of thing when things are going up and they're coming down. They're going to go long, 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 tight, 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 and then you're going to see a bit of a move back around. So you've got the 78 fib, which seems to be pretty much holding for now. I mean, they're sort of really trying to sort of hold it above that with the closes of the candles. Each time you're finding buyers from this zone here. So structurally, it is working well. You've got this sort of falling resistance, which goes back from the whole month of September. It was just in this downward sort of momentum. It's sort of it's really sort of finding resistance every time it's come through it. It's moved through that, albeit it didn't sort of move through it, charge and just break away kind of thing. It just sort of got up and dragged on sideways and consolidated. It is on the outside of that. So that is a positive. That means that, look, you're putting in some fresh highs now, so you could be looking to sort of drag these sort of things through here now. And if you look at this, it's actually lining up pretty well with these 3 points here. So it's just another reason where you've got sort of, 3 bits of information or so that are saying that, look, this is kind of where we're going to find some support, and then we're going to see a bit more of a bounce, and you're starting to sort of see a bit more of a channel moving back up through this way here. So, I mean, I wouldn't really be too worried about sort of gold sort of falling over from here. I mean, obviously, if you sort of come down here around the sort of 1744 mark, then you're starting to worry here because obviously, you know, it's found a lot of buying support through this zone here. And if for the whatever reason it can break this channel that it seems to be forming here now, which looks quite good actually, and it's a nice angle. It's not too steep, but you know, it's moving up. If you see that sort of come down through, break there, come down 74, retest the underside, and then go through 1744 again, then I'd start to get worried if I was a bull. If I was looking for buys and that, and I was just sitting in buys, then I'd be starting to get a little bit sweaty. Then I'd be going, okay, what's really going on here? But gold's a sort of funny one. I mean, it really respects the chart very well, but the actual price action around it is just crazy. Like, it'll do nothing, as I mentioned before, and then it'll just shoot down, hit all the sort of stops, and then it'll shoot back up. So you just need to, you know, understand that if you're trading gold, and you need to sort of allow for that with your stop losses, reduce your position size down a little bit, which, you know, equates for the extra amount of stop space from where, you know, your textbook position for your stops would be, and then sort of look for it. Because I mean, if you look at this is a good example here. You know, price is moving around. Okay, boom. Here's the lows here. Ooh, try to go up. Back down. You know what? I'll put my buy in because it looks like, you know, there's some buys there. I'll put my stop down underneath here. Oh, what did it do? Oh, hit the stops, and then it sort of exploded up. So you just need to keep that in mind if you are trading gold, that they do really like to hit those sort of textbook stops and that, and really sort of take people out. But at the moment, I mean, that's holding an upward channel. So, you know, I mean, there's a couple of reasons for the buyers to be sort of getting long around this zone over here. You've really seen gold moving more with risk on recently as well. It's obviously traditionally a sort of safe haven kind of thing, but now that you've got all these other bitcoins and all these other places where people can sort of put their capital, you're not seeing it move at the same sort of direction. It used to be, okay, equity markets down, well, gold will be up, vice versa. Very simple. But there's so many moving parts in the market at the moment that, you know, it just doesn't seem to be working like that. And actually, I've noticed it moving a lot more with your risk-on assets. So, you know, when you're seeing sort of like, you know, the Aussie dollar moving up and that, I mean, maybe the Aussie dollar moves with gold, but at the same time, it's moving very in sync with your more risk-on sort of assets and that. So yeah, I wouldn't be looking for sells quite yet if I was sort of trading gold. I mean, obviously any move comes back like this looks kind of like, you know, a little bit sticky, but you know, that's the whole point. You know, you've just got to be able to plan for these things, be aware of what it may do, and just wait for the confirmations. I mean, I wouldn't look for the buyers quite yet necessarily, but you know, maybe give it a little bit of time to sort of chill around this zone a little bit more. And then sort of once you sort of start getting back above these sort of points here where it obviously was a little bit of a, I mean, it really depends how quick you want to get on the trigger, but I'd say back up above 1770, even you could be looking for buys. But if you want to sort of be a little bit more cautious, above 1776, and then there's no reason then, if you can get above that 1776 line, then you go push it across here, that you won't be sort of coming back up to tackle 1800. So I definitely think that sort of bulls are definitely in charge, and this is just a healthy sort of pullback at this stage. I mean, it lines up with the RSI perfectly. It's oversold. It's ready to go back up. It might just sort of take a little bit of a grind sideways before it does, and then sort of starts to move back up. But I don't see why you couldn't find buys around here, tackle the sort of 1800 zone, which is obviously round number kind of thing, so a little bit of resistance sort of through there. But I mean, if you sort of can go through there, this previously, yeah, if you can sort of go through this zone here, that's good for a confirmation of the channel and a continuation of the channel. So, you know, give it, you know, back and forth on the way up here, but ultimately if you can get up here, retest this 1800, move back up here, maybe find some sort of resistance there, come back here, and then have another go. I reckon you could be looking at that 1830, and that 1830 is really the big time. Like, if you can get the buyers on board to push price through 1830, you got game on with gold, because that's a big sort of pivot point there. But I mean, like all these things, it's probably not going to go through there. We'll definitely won't go through there first time. So you may see a little bit of back and forth, but certainly if you get to that point, if we get to sort of up to tagging 1830, then you could sort of be dragging out a couple of little bit of thinner zones and that, and be looking for some buys a little bit closer there. But I mean, first things first, let's get off the ground from where they are now. Let's sort of get into a sort of healthy sort of long position, and then sort of look to retackle 1800, and then really sort of assess the market from there.